Here is your weekly rate update. Let's talk about reports last week and what's coming out this week. So last week, stocks rallied and bonds sold off after the UK trade deal was announced. The trade deal kept 10% tariffs in place, but it did lower the all tariff against the US from 5.3 to 1.8%. It was friendlier to our farmers, and it will make it easier for us to export goods to the UK. There's still a lot to figure out though. However, it does seem like the US did put a good deal together. Let's talk about the New York Fed. So the consumer survey from the New York Fed last week showed more signs that the economy is slowing and the consumer is feeling the pinch. Consumers basically reported that they're expecting higher inflation, lower incomes, and a higher unemployment rate. It does seem like the ADP, JOLTS, and every other labor report that we're seeing is showing weakness in the labor market, but you wouldn't know it by looking at the BLS jobs report, the most recent one. But we know that that report will get revised significantly lower. It's just a matter of time. This is something that the Fed should be thinking about, but based on their last meeting, they think there is no risk to waiting and no need to be preemptive in their Fed rate cuts, which is not fun. But let's talk about reports this week. There are a lot of reports coming out this week that can impact interest rates for good or bad. Tomorrow we have the CPI coming out, Wednesday mortgage apps, Thursday PPI, the Fed's favorite measure of inflation, retail sales, initial jobless claims, industrial production, and the NAHB housing market index. Then Friday we have housing starts and permits, the foreign bond investment announcement. Until next week, have a great week.